In a world where economic stability is paramount for survival, the threat of a banking crisis looms large. The recent failures of Silicon Valley Bank, Credit Suisse, and First Republic Bank have shaken global financial markets and raised concerns about a potential repeat of the 2008 global financial crisis. As the world becomes more interconnected and complex, the risks and challenges facing the global economy are daunting. In this era of rapid technological change and economic flux, it's more important than ever to stay informed, stay agile, and stay ready for whatever may happen next. Join us as we explore the dangers and opportunities presented by the current economic trends and learn how we can take proactive steps to navigate this uncertain future. The banking crisis of 2023 has been a hot topic in the news lately, with many analysts and experts speculating on whether or not it could be worse than the 2008 financial crisis.
It doesn't mean anything, but the big question is one of contagion. That is, what we saw in 2008 was when one big bank and a couple of others started to fail, could not pay their depositors, could not actually pay up what they owed. They were closed, and regulators had to move in very, very quickly.
To get to the bottom of this, let's take a look at some of the recent events that have caused concern among investors and economists. First, there was the collapse of Silicon Valley Bank, SVB, in March 2023. This was the biggest bank failure since the global financial crisis of 2008, and it sparked a sell-off in banking stocks around the world. This led to fears that other banks could be forced into insolvency if similar problems arose. Next, we have Credit Suisse's announcement that it would cut its dividend and raise capital to cover losses related to its US wealth management business. This sent shockwaves through the banking sector as investors feared that other banks might follow suit. Finally, First Republic Bank announced that it would stop accepting new deposits due to liquidity issues. This caused further panic among investors as they worried about how this could affect other banks in the near future. These events have led some analysts and experts to speculate that this could be worse than 2008 or even 1929, two major banking crises in history, due to their similarities.
In 2023, the magnitude of that recession is debatable, but I think it's at least a light to moderate recession. Potentially, it's on the order of 2009. So I think it's wise to kind of like prepare for the worst, hope for the best, prepare for the worst. Don't get too adventurous. Like watch out for margin debt. Like I would really advise people to not have margin debt in a volatile stock market.
For instance, Dr. Doom, aka Mark Faber, an economist known for his bearish outlook on markets, said, "We are now entering a period which is very similar to what happened before 1929. Similarly, Elon Musk has warned of an impending economic crash due to excessive debt levels and low interest rates. However, not everyone agrees with these predictions. Federal Reserve Chairman Jerome Powell has said that he does not believe we are headed for another financial crisis like 2008 or 1929 anytime soon. He believes that while there may be some bumps along the way, overall conditions remain strong enough for banks to weather any potential storm without too much difficulty." Other central bank governors have echoed this sentiment by saying that they do not expect any systemic risk from these recent events in banking stocks. The banking crisis of 2023 was caused by a confluence of factors, including the following. Number 1, prolonged low interest rates. Central banks around the world kept interest rates low for years in order to stimulate economic growth after the 2008 financial crisis. This led to a search for yield by investors as they looked for higher returns on their investments. Banks also sought to make up for lower margins on loans due to the low interest rate environment. Number 2, excessive risk-taking. In order to stay competitive and meet investor demands for higher returns, banks took on excessive risk by investing in complex financial securities and instruments. Some of these investments proved to be highly risky and caused huge losses. Number 3, rising debt levels. Corporate debt levels and consumer debt levels reached historic highs. This made it harder for some borrowers to pay back their loans, which led to defaults in some cases. Number 4, lack of regulation. The financial industry had faced increased regulation after the 2008 financial crisis, but many believe that some regulations had been relaxed in recent years. This created a more lenient regulatory environment, which some felt led to the banking crisis. Number 5. Market sentiment. Finally, market sentiment played a role in the crisis. When the news of SVB's collapse and Credit Suisse's troubles broke, it sparked panic among investors who feared the worst. This led to a sell-off in banking stocks and raised concerns about liquidity in the banking system. All of these factors combined led to the banking crisis of 2023. It's worth noting that there were warning signs leading up to this crisis, but many investors and analysts failed to heed them or underestimated their importance. So what can we make of all this? It is clear that there is still much uncertainty around this current banking crisis, and whether or not it will be worse than 2008 or 1929 remains to be seen. However, one thing is certain: investors should remain vigilant and keep an eye out for any signs of trouble ahead so they can protect their investments accordingly. The banking crisis is a looming threat that has been predicted by both Dr. Doom and Elon Musk. According to Nouriel Roubini, nicknamed Dr. Doom on Wall Street, economic crash is inevitable. Elon Musk has also warned that we're headed into a recession on the order of 2009. In addition, Dr. Doom has warned of a mother of all debt crises and cautioned about the risks for US economy. It's clear that both Dr. Doom and Elon Musk are concerned about the current banking crisis and its potential consequences. It's important to stay informed and take necessary precautions in order to protect our finances from this impending crisis. There are some similarities between the banking crisis of 2023 and past financial crises, such as the 2008 global financial crisis and the Great Depression of 1929. Here are a few of the key similarities. Excessive risk-taking. Similar to the financial crisis of 2008, the banking crisis of 2023 was characterized by excessive risk-taking by banks and other financial institutions in search of higher returns. High debt levels. Just like in 1929 and 2008, the banking crisis of 2023 was preceded by high levels of debt among consumers, businesses, and governments. This made it harder for some borrowers to pay back their loans, which led to defaults in some cases. Lack of regulation. In all three of these crises, there was a lack of effective regulation of the financial industry, which led to increased risk-taking and financial instability. Market sentiment. As in the previous crises, market sentiment was a key factor in the banking crisis of 2023. When the news of the failures of SVB, Credit Suisse, and First Republic Bank hit the news, investors panicked and started selling their shares, causing a broader market sell-off. Systemic risk. Finally, all three crises were characterized by concerns about systemic risk to the financial system. In the wake of the 2023 banking crisis, concerns were raised about the potential contagion of banking failures to other parts of the financial system, which could have led to a broader economic crisis. The current economic trends have the potential to significantly impact the global economy in a number of ways. Worries about the high levels of government debt in many countries, coupled with rising inequality, are among the top concerns among policymakers and economists. If interest rates rise or economic growth slows, it could become more difficult for governments to service their debt, potentially leading to higher taxes, cuts in government services, or other measures needed to balance the budget. The growing gap between the rich and poor could have negative economic consequences, including reduced purchasing power for consumers and slower economic growth. It may also pose a greater risk of social unrest. Another trend that has gained in recent years is the volatile financial markets, which have been subject to significant risks and uncertainties. The banking crisis of 2023 is a reminder of the risks inherent in financial markets. When investors lose confidence in the markets, it can trigger a larger economic crisis. The financial system has proven to be both complex and fragile, and as such, policymakers and regulators must keep a close watch on financial risks and take timely and appropriate actions. The rise of disruptive technologies like artificial intelligence, blockchain, and automation is another trend that may impact the economy. While these technologies have the potential to drive innovation and growth, they could also reduce the need for certain types of workers, leading to job losses and economic disruption. The pace of technological change is now faster than ever, and policymakers across the globe must adopt strategies that ensure that workers are best placed to adapt to new technologies. The potential impact of these trends underscores the need for proactive economic policies and individual risk management. Governments and individuals must keep themselves informed and take necessary steps in order to protect themselves from the potential risks and uncertainties that lie ahead. This can include measures like diversification and investments, reducing debt, promoting policies that address inequality, and preparing for potential economic shocks. Overall, it's clear that the current economic trends have the potential to significantly shape our future. And it's important to remain vigilant in order to minimize the risks and maximize the opportunities presented by this changing landscape. While there are certainly some similarities between these different crises, it's worth noting that each crisis is unique in its own way and is shaped by a complex set of economic and social factors. The current economic trends are complex and fraught with risk. It's clear that economies around the world are facing uncertainty in the years to come, but by staying informed and taking proactive measures, we can minimize the risks and maximize the opportunities presented by this changing landscape. The banking crisis in 2023 and the events leading up to it are a stark reminder of the importance of careful monitoring and risk management. By adopting a proactive approach and preparing for potential economic shocks, we can take steps to protect ourselves and our future. Ultimately, it's up to all of us to be aware, informed, and ready to adapt to the changes that lay ahead.